Hello, trading is closed on the 20th of October 2015. I'm Jeff Tennant. My last call said unless we had a gap over Monday's high that I felt the pattern was negative. There wasn't a gap and we did close in the red, although not by as much as I thought we would. I thought we would undercut this low, which didn't happen. During the day, MEJT said ultimately lower prices would print, and despite this false move up, they did. It said here ultimately lower prices would print, they did, but it said the drop was false and prices would return to this line after this time, which they did here. MEJT is basically a day trading system, and it's not so unusual when it does not give a call for the subsequent day. Well, we have a number of patterns which justify a drop here, but the patterns have been in existence long enough so that the outcome remains rather iffy. Here's a 5-minute chart. We have what's called a 3 days tight pattern. Usually that's consolidation before the next move, which is usually pretty big. It's not good that despite hitting a series of new highs, we couldn't close over any of them. We did close slightly over this high, but with less than 5 minutes left to trade, we were under it, and that's not good enough for me. We still have Fibonacci resistance here, but the longer we're at the resistance, the more likely we are to break up. Here are some Gann fan lines. Here's 1 by 1, here's 1 by 3. They met exactly at today's high, showing intense resistance at the high today. The sell-off immediately from the high gives some credence to the theory that this high will hold. But it really didn't drop low enough for me to seal the deal. I think the most likely scenario is that we have a gap outside of today's range tomorrow. If we can break over this high, we can rally in grand style. But if we can break under this low, and particularly under the low of the last 3 days, I think we should be ready for a pretty good drop. And I'm not going to make a prediction as to which direction the gap, if it occurs, is going to be. And that's today's call.